With the tumultuous times in the year 2023, commercial establishments such as banks are tethering on the brink of collapse and are going to cease functioning soon. And it's becoming very clear that the US has become the first target of this economic upheaval, with the collapse of its two banks, Silicon Valley Bank and Signature Bank, in just under 48 hours. The country is now facing the second and third largest bank failures since the Great Recession in 2008. But how did these bank collapses occur in the first place? Why did people, after Joe Biden promised them swift bailouts, withdraw their money of $42 billion, causing a run on the banks? Is it the fact that the memory of the 2008 bank collapse and absence of proper compensation was still fresh in their minds? Also, is this a passing crisis? And what grave impacts will it have on the economy and the banking sector? And why is the collapse raising so many questions surrounding political moves, recession, and the fragility of the US capitalist society? After spending hours trying to figure this out, trust me when I tell you that the story of the recent bank failures, especially in the US, is a rabbit hole, and it is evident that this is just a small part of a much larger problem. Join me today in this video where we will explore why the US financial system could be on the cusp of catastrophe, and why this time around we might not be able to save it. On March 10th, US citizens woke up to a crisis looming in the country's financial sector that would bring ripples of shock and chaos in the upcoming days. With just under a 48-hour time lapse, two of its banks were down, forcing the US government to step in. But this sudden collapse of the Silicon Valley Bank and Signature Bank were not instant. In fact, the storm had been quietly brewing up for months prior to the actual crisis. Allow me to break it down for you. As part of its safety measure, since the 2008 global financial crisis, the US government, in accordance with the vast majority of regulators, had succeeded in keeping a tight grip on the financial system to prevent a repeat of such a large-scale catastrophe. This is done by effectively regulating banks and financial institutions that stops them from taking extreme financial risks, especially when it comes down to their customers' deposits. But if the Silicon Bank was adhering to these regulations, how and where did things start to take a tumultuous turn? You see, for the most part, Silicon Valley Bank adhered to the US government's guidelines when it came to its customers' deposits. The problem arose when interest rates by the Federal Reserve began to rise rapidly in 2022, and the value of the long-dated maturities that the bank had brought with very low rates of return began to fall. It is believed that the Federal Reserve raised interest rates 8 times in 2022 to combat the highest inflation in generations. With rates rising this high, newer versions of bonds became more valuable to investors than those currently held by the SVB. As a result, to come up with enough money to repay depositors, the bank sold over $21 billion of its bonds, which racked up nearly $2 billion in losses. Resultantly, when word of these losses got out, it sent off an alarm bell, with investors and some of the bank's customers rushing to withdraw their funds of almost tens of billions of dollars. They believed that if the haggard state of SVB's balance sheet was perforated with similar money-losing assets, how much longer would the bank be able to come up with enough money to repay its depositors? This caused a classic bank run at lightning speed thanks to the smartphone apps that make money withdrawals a click away. SVB went down within a gap of 2 days. But it was not just the SVB that suffered a failure. Another bank, Signature Bank, working in the cryptocurrency sector, quickly joined the ranks. According to reports, the cause of Signature collapsing was credited to the fact that Signature was one of the few banks in the United States that accepted crypto assets for deposits, something banking regulators have urged banks to regard with caution. At the time of collapse, it is believed that Signature's digital assets stood at $16.52 billion, or just under 20% of its $88 billion in customer deposits. This collapse sent a clear message to other banks to stay away from cryptocurrencies despite their attractive pitch. For instance, take FTX, operating from the Bahamas, which was able to commit a series of reckless transactions that subsequently made it collapse. Even today, FTX still owes roughly $3 billion to creditors. As a result, way before the collapse of Signature, regulators had already started sounding the alarm, warning banking organizations to deal cautiously with cryptocurrencies, with others urging keeping the money within the bonds of the traditional regulated system, but it seems all warnings fell on deaf ears. In the aftermath of the SVB and Signature Bank collapse, there was a display of blame game and pointing fingers which did nothing to solve the actual problem. Lawmakers hounded federal regulators, questioning their part in the banks imploding. Others put the blame on Silicon Valley Bank's executives and filed lawsuits against the top 2 executives in San Francisco federal court. The charges cited against them that the bank had misled investors by not fully disclosing the impact of rising interest rates on its operations, which led to its collapse. But is this the entire picture that led to the failure of the 2 banks in the US? Or is there a side of the coin not being shown? Is it the increased interest rate by the FED? The run-on by customers withdrawing their cash in a panic? Or the failure of the bank's executives? Or is it something more sinister than these 2 reasons? Some believe that the failure points to much more problems and opens up a number of other reasons that critics believe to have led to the collapse. To answer what these other reasons are, that's who is really to blame for this banking crisis, and what does this collapsing event hold for us in the future? After some intensive research, this is what I found. According to CNN columnist Stephen Collinson, in his article "America's Biggest Problem is Its Politics," mentions that SVB's collapse is much more of a political problem than it is an economic problem. They believe that it is the politics that has driven the financial institutes to this state. President Biden, for instance, vowed to overthrow Trump's former financial rules regarding regional banks and providing bail to fill out the losses. Biden was quoted saying, "Americans can have confidence that the banking system is safe. Your deposits will be there when you need them." But the important question that arises here is why now, when the problem has long been ongoing and the warning signs of an epic financial crisis were blinking steadily through 2008? Why now, when the new elections of 2024 are just around the corner? Another thing that critics have pointed out that stems from the failure of these banks is that their collapse upholds the testimony that bigger US banks want socialism for themselves and capitalism for everyone else, including smaller regional banks, thus pointing towards the fragility of the capitalist economy. Like Biden in 2008, then President George W. Bush had attempting to quell potential panic on Main Street. In the long run, I'm confident that our capital markets are flexible and resilient and can deal with these adjustments. But in action, his stance had supported a kind of socialism that favored Wall Street rather than the workers. It could be due to the reason that none of the Wall Street CEO go to jail after the financial crisis that is still fresh in the mind of current small business owners. And it is this mindset that they withdrew their funds in a frenzy? No doubt, throughout the reporting of the financial crisis in 2008, the 10-year reporting pointed out that the crisis altered the lives of millions of people who had lost everything, ranging from their homes, their jobs, and their savings. It is believed that the recession collectively destroyed over $30 trillion of the world's wealth, but sadly, no Wall Street executives ever went to jail for it. Could this be the reason that while relative calm has been restored thanks to the provision of huge sums of emergency cash from lenders such as the central banks, it is feared that small business owners are again the only ones facing the heat of this financial collapse? While the FDIC's state that its standard insurance covers up to $250,000 per depositor, per bank, for each account ownership category, which will ensure that these small business owners ultimately get all their money back. The real concern is that until this process unfolds, small business owners will have issues making payrolls. The worst outcome could be a complete dry up of the flow of credit, which would ultimately see these businesses going down way before they got their insurance. And this is not some far-fetched claim. For instance, while Brian Lord, the chief executive of a medical devices company called Pristine Surgical, said that he had to spend more than 5 hours refreshing the bank's website and working their way through the digital queue in order to get his firm's money out of SVB, adding that he had no idea when he would see that money until the funds actually made it out of the bank Monday afternoon. You're not sure whether it's going to be Monday, Tuesday, Friday, or a month, adding that a longer wait would be problematic. He did get his money in the end, but for the other startup executives, they were still waiting for their money to be cleared from the bank, even after days had passed. Zaid Rahman is one founder of the financial technology startup Flexbase, who is still left with facing the dilemma of when he will receive his money, and the tough question of whether he can still count on the loans that Silicon Valley Bank had promised him. But what implications does this collapse hold for you, especially if you are a small business owner? What are some of the things that will change as a result of this economic default? And what are some of the consequences that we will have to deal with if the banking collapse is not dealt with properly? This turmoil headed our way, it is believed, will bring an end to an era of easy money. Now, smaller regional banks probably will be more cautious about lending financial assistance to consumers and businesses to preserve their cash in case of unusually large depositor withdrawals. According to Goldman economists Manuel Abicasis and David Miracle, this will gravely affect the sector of investments and can ultimately cause a recession. Financial investors are also worried that if the promised bailouts and further collapses are not avoided, this will lead to the lack of trust in our Twitter generation, subsequently leading to greater withdrawals and the potential for permanent closure of banks. This observation results from the growing concerns that although Fed has promised not to be that aggressive with its interest rates, by June the rates have fallen from 5.48% to 4.57%. This may not be the same in the long run. This is why Fed financial Mr. McKnight asserts that we think there is more volatility to come. It doesn't change our view that the Fed will be very focused on inflation and continuing with another rate increase. The hard-hitting reality that even with smaller banks such as the SVB and Signature causing this much upheaval, instead of blaming and pointing fingers, Daniel Tarullo, a former Fed governor, believes that regulators and the government have to think much harder about effective strategies in case a bank's failure that is much bigger in scale, adding that we need to talk about it beforehand. Mark Williams, author of a book Uncontrolled Risk: The Lessons of Lehman Brothers and How Systemic Risk Can Still Bring Down the World Financial System, also believes that the issue needs to be addressed because if not quelled, bank runs can spread like wildfire, crippling even the soundest of banks. Whereas Jason Furman, former director of the National Economic Council of the United States, has also expressed his concerns in a tweet saying that the system's failed and it was jury-rigged to keep it going. Need a better system. And these are insights that need to be dealt with firmly if any further chaos is to be avoided at all costs. With that said, while the current bank collapse is believed to be not as bad as the Great Recession, the very fact that people still withdrew their money with the president stepping in to assure swift bailouts. Do you think that the trust of the Twitter generation in the country's financial system is broken? Do you believe that as there is a lack of trust, time isn't far away when the banks will be forced to close their doors once and for all? Out of all of these accusations and causes of the banks collapsing in the US, which do you believe is the main cause of the collapse? Also, do you believe that this is a one-time event and that banks are safe for now, or are tumultuous times heralding the future? Let us know in the comments section below. Anyways guys, if you want to see more interesting videos, click the video right above. Thank you for watching. Don't forget to subscribe with all notifications enabled so you don't miss out on the latest finance and business news.